Good afternoon, everyone. My name is Xufei Ai. I'm a first-year full-time MBA student, and this is Jubing Ge, a sophomore at UCLA, majoring in global studies and economics. So we are the co-directors of today's final panel discussion, focused on the real estate sector, titled Drivers, Challenges, and Strategies of the Surging Chinese Investment in U.S. Real Estate Markets. Chinese capital is reshaping the real estate markets. Over the past few years, major U.S. cities have witnessed a significant flood of Chinese capital into the residential, retail, and commercial real estate markets, from the Chinese high net worth individuals, developers, and large institutional investors. So the real estate deals follow a broader exodus of money from China to countries and companies around the world. Our panelists will review the different strategies of various investment and development initiatives and discuss some of the challenges, including legal, management, and tax considerations. They will also share their insights on the future of Chinese capital inflows into the various real estate sectors.
Thank you for coming, everyone. Please take a seat. We are delighted to welcome the following distinguished speakers on this panel. Jack Liao, Chief Operating Officer from Shimao Property Holdings Limited. Welcome. Chang Liu, Senior Vice President, Deputy Chief Lending Officer from Cathay Bank. Welcome. And Christopher Rising, President and Chief Operating Officer of Rising Realty Partners. And Jenny Zhan, Executive Vice President and Chief Accounting Officer from Interstate Hotels and Resorts. This panel will be moderated by Kevin Ehrhart, a partner at Latham and Warkins. Mr. Ehrhart represents real estate investors, capital providers, owners, developers, and others in all aspects of real estate-related transactions. He regularly advises domestic and foreign investors and operators with respect to the formation and capitalization of joint ventures, partnerships, and limited liability companies, focus on all matters related to the ownership and operation of commercial real estate. He has represented institutional Chinese investors, both private and state-owned enterprises, in various real estate transactions in the United States. Welcome, Kevin Ehrhart. Please join me in welcoming our moderator and panelists.
Thank you very much, and it's great to be here. Thank you all for attending what should be a fun discussion of investment opportunities and issues in U.S. real estate. I had the opportunity 2 or 3 weeks ago with some of my partners to spend a week in China, in Beijing and in Shanghai, and meet with some of our clients and others in China who are interested in investing into U.S. real estate. Some of them have already invested here. Some are interested, and it was a very educational opportunity for us to hear about some of the issues and concerns that they had, as well as some of the things that they found to be exciting in terms of opportunities here. And I'm sure we'll touch on those and some of those during our time here today. But we'll go straight to our panelists. And Jack, first of all, like to thank you for coming all the way from Shanghai to be on our panel. A long trip indeed, but we're grateful that you're here. Maybe you could just tell us a little bit about what Shimao Property Holdings does and how you are viewing opportunities in the U.S. as you begin to look at the U.S. as a new place to invest.
谢谢，我可能需要中文，可能他需要帮我翻译一下啊，这个很抱歉，因为我的英语还不至于不能讲得太准确。
First, thank you very much, and I'd like to apologize ahead of time because my English is not exactly to the point at this moment, so I'm going to require someone to interpret for me. So thank you very much for your understanding.
对，这也是中国企业到美国投资一个第一大障碍之一。
And I would say this is the first barrier I would like to name of Chinese enterprises trying to invest in the U.S. market.
因为世贸呢是中国的房地产开发企业，开发商啊，我们现在呢主要是以住宅为主，但同时还有酒店、有商业，有我们自己的主题乐园，还有自己的物业公司啊。我们一年大概销售额大概规模在700亿人民币，大概120亿美金左右吧。
So thank you very much. Our Shimao Property Holdings Company, we are responsible for real estate development, and mainly the properties that we develop include residential buildings, including hotels, also commercial buildings. We also have our amusement park development, and we also have various other property holdings as well. I would say the overall capitalization is somewhere around 12 billion US dollars.
我们也非常觉得美国也未来会是我们考虑的在境外投资的一个主要的目的地。因为我的身边的很多朋友啊，包括企业啊，都已经开始在美国投资啊，比如说酒店呐，比如说我们的商业呀，美国的商业，还有很多美国的包括一些公寓的资产啊，未来呢可能。在我的看来呢，未来这种趋势还会进一步的这个增大投资啊，因为很简单，其实我的朋友我问过他们为什么来投资啊，这个可能想法和我也很像，因为我是可能在一线做，可能因为你们是在美国看中国，我是在中国看美国啊，这个视角略有不同，所以我可以告诉大家几个秘密吧。
Okay.
So I would say that the United States is indeed a main destination that we aim to develop and invest in sometime in the future. So right now, we are seeing a lot of our friends, including businesses that are beginning to invest in the U.S. market. For example, investing in hotels, investing in commercial real estate, also apartment buildings is also a destination for a lot of these capital. And I would say that from my perspective, I believe this trend is going to continue, and there is going to be more investment into the U.S. market. And this is very easy from our perspective. I understand that many of us here are looking at this entire market from the U.S. point of view, but from our point of view, working in the first-tier market in China, we have a slightly different perspective, and we believe that strong trend is only going to pick up and is only going to continue into the future. And I would say that from my perspective, I can perhaps share with you a few secrets about how we're doing this investment here in the United States.
第一个原因其实是在国内的金融，包括就国内的钱吧，这些资本会在寻找一些避险的方式，其中比如说风险主要来自于比如人民币的长期的贬值预期，再加上中国经济现在有一些下滑的趋势。那这一部分会造成资本的风险。那我在美国或者在其他国家投资的话，可能会对冲我的这种风险。
Now I would say the first reason why that we see this trend and we believe this trend will continue is that in a lot of times these capital currently in China is seeking a safe haven to invest their money, and namely it's risk management. So we're looking at a lot of these Chinese renminbis that we have an expectation that in the future is going to depreciate. So that is the first reason why they want to manage risk. The second reason is that we're expecting an economic slowdown, and that is why these capital are faced with risks that are currently in China. So we're going to see more of these capitals flowing into the United States to hedge these kind of risks.
第二个原因其实是为了能够和自己的主业形成一些协同的发展效应。比如说，我举个例子，这个中国未来的地产，养老地产会是一个具有巨大市场的一个产业但是在中国的养老的经营管理公司其实是刚刚发展起来。那这样在美国或者说在其他国家，在日本，它会有这样成熟的这些企业，那些企业也会成为很多中国公司的投资标的，即是为了让自己国内的这些产业能够更好的发展，两个相互结合。
And the second reason I would say it is because that we want to find other businesses and opportunities that will create a kind of synergy with our main line of business back home in China. Now let me share with you an example to illustrate. For example, right now in China, our real estate industry see an opportunity in senior housing development. And in this particular industry, we anticipate a huge economic growth in the future. And China right now is trying to develop this field. However, we are relatively new in this industry. And there are other countries such as the United States and Japan is very developed in this particular sector of the real estate market. So you can pretty much anticipate that there is going to be more capital inflow into these businesses that are in the United States or in Japan. That is because these Chinese entities want to build up these capacities by learning from their investment bodies abroad and to bring these expertise back home to create that kind of synergy.
如果你有这样的企业，我想你可以要一个好价钱。
So if you have a kind of company that is in this line of work, start thinking about your price.
Oh, thank you, Jack. And Jack is being modest about his English. He and I spoke for a while before the panel. And in any event, it's significantly better than my Mandarin. So, thank you. Thank you, Jack. Jenny, so at Interstate is the largest third-party manager of hotels in the world. Maybe you could talk for briefly about how you're helping Asian investors view product here in the U.S. and how you're interacting with those buyers.
Yep, absolutely. So thank you, Kevin. Thank you, Jack here. And I just heard, the secrets that you have for folks here and investors here. I can't agree with more. I hear there's fund coming out. I hear there's a lot of Chinese coming out, and I love to hear that because it's a segment that we very much focus on. Interstate Hotel and Resorts, I'm not sure whether you are very familiar with the hotel industry. Typically, there are three key parties in the operations of the market. You have to have a franchisor, and all of you have heard about Marriott, Hilton, and Hyatt. These are the brands, right? And then we have obviously investors. Now, most importantly, between the investors and the franchisors, you have to have a hotel manager, and we are in the space, and we are the global leading largest independent hotel manager. We actually recognize the importance of these inbound funds, especially in the real estate market. Most people don't know, actually. Most likely, we are the world's largest operator in terms of servicing our investors from China. Currently, we run about almost 500 hotels globally, and of that, we have about 34 hotels with 17 owners that are from China or Chinese that have established the basements here. So when you look at these investors coming in, what they're looking for, you've heard some of that from Jack just now, just in terms of understanding the local market and really finding the necessary resources in helping them navigate the different aspects of operating here in the States. They find that we do offer that kind of niche. In our practice, we actually have, from a number of years ago, we already established an Asian practice, and it's led by a gentleman by the name of Don Lee, pretty senior executive with our company. He's born in China, had 20 years of industry experience, so he's really spearheading our business development in terms of working with the Chinese, Asian owners at large. He understands the culture, he understands the investment goals brought by our Chinese investors. So we really find it a really nice growing market for us.
Yeah, absolutely. And there's been a lot of Chinese capital interested in the hotel space over the last couple of months, some very high-profile deals, which maybe we'll touch on a little bit later. So Chris, as an operator and an owner of real estate here in Southern California, maybe you could talk about first what Rising Realty Partners does and how you are viewing the increased Chinese capital coming into real estate here.
Well, Rising Realty Partners is a firm my father and I founded in 2012, but my father has been in real estate since the 1970s. He was was partners with Rob McGuire and Jim Thomas. He was the partner in charge of building Library Tower and the gas company, entitling Playa Vista here. He was the chairman and CEO of Cathay Development, which was a company when he took over, it was about $400 million market cap. Sold it to Prologis, the largest industrial developer in the world, with a market cap close to $6 billion. known for entitlements and development, developed all of Mission Bay. So if you go to San Francisco and you know where AT&T Park is, that was all Catellus. And my father and I had a career as a lawyer and as a real estate broker, and we formed our company in 2012 under the premise that after the last, the global recession, that there were not a lot of people who set up their company to be a GP, LP type of real estate company, where we put in a percentage of the 10% or so of the money, we raise capital from an LP perspective for 90%, but we have in-house the best construction people, the best entitlement people, the best property management. We really believe, whether it's through development or through acquiring and operating properties, that the real value is created by the team and the expertise that's there. And we've built a practice, or built an investment and development company focused on impact. I think anybody who looks at global investment today hears this term impact investing. In the pension fund world, they're really talking about it as ESG, environmental, social, and government, which means are you focused on what this property is doing to the environment, what is its place, and what are you doing to be socially responsible, and do you have good corporate governance? We take that to the real estate world and focus on three things: environmental, technology, and social. And for environmental, I don't know if everyone's aware, but outside of cargo ships and cruise ships, office buildings and apartment buildings are the largest polluters of carbon in the world. So the industry we are in is really destroying the environment in a lot of ways. So what we do in every project is get it the highest Energy Star rating possible. We get it to LEED Platinum. We get every project we're in to the highest building wellness standards. And what we found is when you do that, not only are you lowering your operating costs and getting to net zero energy, you're also increasing your investment tremendously. And we have the statistics to prove it. And in a place like California, where we spend most of our time, it's very hard to develop here. We've done a lot of development, but we really think the future is taking buildings that were built in the 60s, 70s, 80s, and 90s and converting them. The other piece of the puzzle is taking copper out of buildings and getting fiber there, creating Wi-Fi networks, and then we also take a socially responsible view in every project we do, and that's where we curate a tenant experience around charitable causes as well. So we took a little page out of Tom Shoes' book. So what's really important is, because we are set up to be a GP with LP, is with the influx of Chinese capital, we've worked very hard to develop relationships because there's a very good fit with that. Now I'll tell you, Kevin and I are in the middle of a deal right now, over $200 million deal, with a New York-based real estate private equity firm. But that's taken 18 months to develop that relationship, to get to the deal that makes sense, to get through the first document. Remember, these are just people trying to do business with lots of risk. And I think one of the things that we're seeing in developing relationships with Chinese firms, first, they're human beings just like everybody else. They worried about, is this person going to take my money and run away with it, or is this person going to screw it up? Those things take a lot of time. And I think what's exciting is when you have conferences like this, it's not somebody sitting in Shanghai and someone sitting in LA exchanging emails. It's people getting face to face, because deals take a long time, there's a lot at risk, and they're all based on trust.
Yeah, absolutely. It was something that when I mentioned earlier, we spent some time in Beijing and Shanghai a couple of weeks ago, and that's the biggest issue we talked about, is establishing the relationship in advance of a transaction. If you wait until the transaction hits and now you're trying to marry an operator with a capital source from overseas, it's too late. So the need to develop the relationship. So Chang, maybe you could talk a little bit about what you're seeing from the debt side, what you're seeing in terms of strategies and differences that Chinese investors coming into the U.S. in real estate, how are they managing their debt? What are the concerns that they have? And how are you as a lender helping them get past those concerns?
So for us, as a debt provider to the real estate business, for these inbound investors from China, really it kind of comes down to a couple of different areas. For the most part, if there are a significant developer in China, they most likely already have an existing relationship with a very large China-based bank. And for that, and they typically have presence out here in the US. So we've seen transactions in which somebody would just come in, whether it's an acquisition or development, they would just go to their China-based bank partners and just kind of finance their project here in the US that way. That doesn't apply to all of the inbound investments. Some of the other sort of investors or real estate companies that don't have that kind of relationship, they would have to come in typically either A, try to strike out on their own and do it on their own, which could be challenging. From a lender's perspective, when you do that, for us, we look at sort of your transaction history, whether or not if you have anything here, your development history, if you have any experience, whether or not if you have sort of entitlement experience, who are the GC contacts that you have out here in terms of developing a project or buying a project, how are you going to manage it, who's going to lease it. So those are a lot of the questions that we will ask. Now, the third option is what some people will do is they'll partner up with a local partner, such as an operator. So either A, they sort of they typically will form a joint venture with a local developer, and we've seen that a lot, where they will come in with the bulk of the equity capital, 85%, and then the local partner will sort of take the balance. But that's where you have the local experience, the local expertise, and that's kind of, we've seen a lot of those kind of transactions quite a bit.
Right, and are those easier for you to finance when there's a local partner involved?
Yeah, absolutely. Because when we kind of can look at the local partner and kind of vet their experience, their expertise, and what they've done, some of the successful projects they've done and developed in the past. So we really kind of focus on that and rely on their strength and expertise, even though from an equity perspective, they might only be 5 to 10%. But here you have somebody who's gone through this, have done it, have shown success, and for the most part, the investment from China is really just the inbound equity partner. Sure, they're going to have some say in the decisions, but for the most part, I think they rely on the local partners to the extent they choose the right ones.
Yeah, very true. It's interesting from a legal perspective. The federal government and local governments aren't usually in the business of making investment easier, but at the end of last year, the federal government relaxed some of the rules that impact foreign investors. It's known as FIRPTA, the Foreign Investment Real Property Tax Act, and I don't want to bore you with tax and legal issues, but the impact of these changes in the late days of 2015 was to free up significant amounts of foreign capital for investment into U.S. real estate, to relax some of the tax the tax impacts on, in particular, foreign pension funds and large foreign investors. So with that, we are starting to see, just in the first few months of 2016, a significant increase in the amount of capital that is sort of lining up for inbound investment, and not just from China, but probably the biggest increase has been from China. And so with that, Jack, maybe you could talk about how your company is viewing opportunities today versus how you viewed them a year ago, or maybe 2 years ago. And are there opportunities with some of the relaxed regulations? It's still a very highly regulated environment, and I think that regulatory environment scares off some foreign investors. But how does the regulatory environment here in the U.S. Impact your decision to invest?
确实，美国的这些法律法规和中国其实是完全不同的啊，这一点可能是我们觉得投资美国企业投资美国的这个决定往往难以下定决心里很重要的原因啊。
Indeed, I think the U.S. regulatory environment is very different to that of China's. And I think when deciding whether to invest in a property in the United States, that's actually a very heavy weight on our decision making.
但同时我们其实也看到美国的法律法律法规又相对比较明确，这个其实又和中国的不太一样啊。中国因为有很多事情可以研究。
And also, on the other hand, if you look at U.S. regulation, it is very clear and concise, which is very different to that of China. I would say in China, you have some leeways into discovering what the law actually means in the process.
对，而且中国呢讲叫关系嘛，这个因为中国政府的这个作用，其实有时候比法律法规本身其实要更对我们的业务的影响会更大。
And you know, in China, we talk a lot about relationships. So the government in this particular domain has more weight compared to what the regulatory framework might say.
对，所以从这个角度看呢，其实又这个法律法规对我们对于投资企业来说，又是让我们放心的一个原因。
So this type of regulatory environment is also somewhat of a comfortable environment for us who are used to that particular way of doing business.
对，对我们来说，和当地的企业或者是专业人士合作，是一个最安全也是最有效的办法。
So I think partnering with a local partner is probably the most comfortable way and the way that we prefer to do business here.
Yeah, and so Chris, with that in mind, there's regulatory obstacles, and then there are relationship obstacles that you touched on. Jack said the best path forward is to partner with someone who's local like you. So from a relationship perspective, what is an example of something that you have to explain to a foreign investor that you might not always have to explain to a domestic investor? How do you get past that? And I know you personally spend a lot of time on relationships. So how can you work on that? Yeah.
Well, I always want to preface things with, I don't know necessarily that there's a big difference between, say, a Chinese and an American firm, because I still have problems with my American partners wondering whether we're speaking the same language. So, and what one person calls an asset management fee, somebody else calls a property management fee. So it's difficult no matter what. But I do think there's something unique to doing real estate deals in the West that my experience in my negotiations and discussions with Chinese partners is that here in the West, we have a system where we call it promotes, where myself as a real estate operator, I go find the deal, I put in 10% of the money, the partner puts in 90% of the money, we agree that this deal should hit a certain threshold, say a 10% threshold, and we argue all the time whether that should be 8, 10, or 12, but we come to an agreement that this deal should be a 10, and our money's treated pari passu, it's treated equally. After a 10, my firm would get to keep 15% of the profits. And then after another, say a 16 internal, I'm talking levered IRRs. After a 16, my firm would keep 25% of the profits. And that's a very unique way in the West. It happens in Europe as well. But I know that that's not very common in China. In China, what's been explained to me is you put in 10% of the money, you keep 10% of the profits, and I'll keep 90%. And that system it evolved here because basically I get paid a little bit more for putting together a good deal, and people want to do that with us because we have unique relationships or we have a great track record. And that's been the biggest issue. I will tell you, 5 years ago, it was kind of a non-starter. Today, I think that the Chinese investors are much more sophisticated in how deals are done in the West. And I think we're getting better. I'm working on a $100 million core fund with an investor. And it's probably easier to do it in the core world because you're talking about much lower returns and the profit splits are much lower. But I just think it's a matter of time. And as I said, I've gotten to the point in my career is it doesn't really matter if you're from China or India or Japan. It's difficult because of language and all of that, but our friends over on Wall Street are the hardest to do deals with. So sometimes I find it refreshing when I'm talking to someone from China. At least we both know we have to get over the language.
But Kevin, if I could add,
Yeah.
just to the point that Jack mentioned, I think we did experience some of that working with the Chinese owners, but in a good way, right? I think we also have a kind of discovery, using your word, process of navigating contracts, not necessarily in terms of the laws. Here again, just in our unique industry, whenever I take over a hotel from basically managing it on behalf of the owner, all of the employees at the hotel are my employees, right? When you have a Chinese owner coming over, and the first thing they always ask is, do I have control? Because you really like to have control, right? You want to know what's going on. And when it comes to personnel, it means they want to control. They want to control the GM, the general manager, how they report things, what kind of numbers they're looking at. So, we have seen, right, just constant back and forth. So it's something that we come together to the table, really understand where you come from, what their investment goals, but then in terms of the day-to-day, really what really ticks them off, right? What they care about, and I call it healthy discovery because it's back and forth, understanding what their expectation is, and within the parameters of the law. Because anytime you come to whether certain employees are yours or mine, there's federal employment laws, right, around those kind of things. So it's about education along the process, discovery, and get to a central point. But I can't agree with you more about the other things, and we all experience universally. So promote is something that we actually see very, very often in our market, and the Chinese owners, they're more and more receptive to it. So.
Well, and as the world continues to flatten, these different ways of doing business, these different dynamics become a little bit more common. They're seen more commonly, and they become less strange, and then everybody adapts to one another. Yeah. At least that's the idea. And I think we've seen it. We see it actually in terms of transaction costs. 5 years ago, to do an investment of Chinese capital into U.S. real estate, it's an expensive endeavor, both from a legal and tax structuring process, as well as paying other consultants and advisors. And there was a big learning curve as the amount of capital coming into the U.S. really started to be low and started growing, and more deals were getting done. We started getting smarter and more efficient, and now those transaction costs are significantly lower than they were even a couple of years ago. Not just from the legal side, but from the tax and accounting
when
side
did your
as
legal
well.
bills go down? I'm sorry.
We're talking about Chinese capital coming in. But the result of that, the net effect of that, is that it opens up the possibility for transactions of smaller and more modest size. So you don't necessarily need to be doing a Waldorf Astoria transaction, a couple $1 billion to justify, a deal of that size to justify the costs and the transaction fees that you pay to third parties. Now you can do smaller deals. I'm selling a hotel right now in Cerritos to an investor from China, and it's a relatively small, a modest transaction. So it's been interesting to see as people become more familiar with one another and the transaction costs come down, how that opens up the possibility of new markets and new assets and different transactions. So Chang, maybe you could talk a little bit about some of the concerns from an underwriting perspective that lenders have. We've talked a little bit earlier about know your customer. You can talk about that, but some of the issues that are going to be maybe unknown to Chinese investors coming in looking for debt here in the U.S., but that you have to walk them through.
So from that perspective, I think the way we would look at that is it really depends on whether or not if they're doing it on their own or they're doing it as a joint venture. If they're doing it as a joint venture with a local operator, we would underwrite both, probably relying more on the local partner, less so on the Chinese investment company. We would kind of still vet them out, want to know what business they're in China. We do have, Cathay Bank does have a Shanghai rep office, so we can kind of reach back to the Shanghai rep office and get some information and some feedback about the company. And then probably just in terms of their ability to execute and what they've done in China in those kind of projects. And so that's how we would kind of vet them out. For purely just a inbound company from China coming in here to the US just to do one deal on their own, whether it's acquisition of an existing stabilized asset or development of a ground up, I think that becomes more challenging for us from an underwriting perspective of all the factors I've talked about, which was experience, lack of assets, or lack of recurring cash flow, if you will. We are a recourse lender, so that means we're going to want some level of guarantee, both completion and repayment guarantee. Now, we would be understanding of a China-based company not having a warm body, but there could be, for example, an entity that they've set up here in the US. They have multiple investments, whether it's San Francisco, Boston, for example, and those have real equity in terms of the project. So we would be inclined to look at that entity as a potential guarantor, but then there will be some limitations about, well, what is the minimum net worth we want to see? What is the minimum liquidity we want to see? So all of those stuff, in terms of how we underwrite that deal, underwrite that transaction, would change, because 9 out of 10 times, they may not have either one body or an entity that's viable for us to seek as a recourse guarantor that we typically would look for.
Interesting. Yeah, and those are issues you have to solve for every borrower on every transaction. It's just for some who haven't been through that process before, it can be strange. It could also be time consuming.
Right. I mean, the perfect example is right here on the stage, right? I mean, Jack is great, but if Jack and I are on a panel together, just because Jack comes in tomorrow and says, "Hey, I got a great deal," but I'm going to run into all those problems with Jack, right? But if Jack partners up with Chris, guess what? That would make the underwriting and sort of looking at the deal and the transaction a lot more palatable, a lot easier. So that's just a perfect example of what's here.
And then you'll get the debt. And you can get a brokerage fee as well.
But Chris told me earlier that he would lower his promote to 3%. So.
That's on the 30%.
Right.
Maybe you could talk just for a minute, because it got a lot of publicity, and it's obviously a high-profile transaction, the Anbang deal that ended up not working out. But maybe you could just talk about sort of some of the interest of foreign capital in the hospitality sector, whether you think that'll continue. What are you thinking at Interstate?
Yeah, absolutely. Anbang has been very active. I still remember, I think it was now a year and a half ago, when they basically shocked the world with the $2 billion purchase of the Waldorf Astoria in New York. That really shocked everybody, but when you look at from a long-term, just how globally, how they take such a long-term view towards owning investment asset, it's actually not surprising at all. Compared to the U.S. companies that we work with, we feel there's a little bit of difference there. I mean, most of the U.S. Real estate private equities, they tend to have a shorter holding period. I think pretty much all of them have looked at 5 years, top 7 years of investment cycle. Whereas when you look at the established Chinese companies coming over, they are looking at much global, much long term. When they look at the kind of asset they want to invest in, and most obviously it's a lot of the coastal cities, New York, here in LA and San Francisco. These are the cities that they're familiar with, and obviously with the market as well. By the purchase of the Waldorf, essentially I think they probably got the most valuable asset in New York, and New York being the center of the world finance, right? So I think there's going to be more and more of these coming, and Jack just mentioned some of the strategy, really the thinking behind it, to try to balance the investment risk. So I definitely see a lot of them coming, and they're really not alone. The other example is Zhan. Zhan, 5 years ago, partnered with a local private firm and did a major investment. But they recently also just increased their equity stake in Accord, also a very large hotel chain. So I definitely see just a consistent application of the long-term global view towards investment overseas. I think there's going to be more coming, definitely a much bigger market.
Yeah, and amazingly, I think Chinese life companies are restricted to no more than 15% of their balance sheet can be invested overseas. And so when Anbang made their offer on the Starwood assets, that was a day after they had bought Strategic, and they'd already bought the Waldorf, so they had roughly $20 to $25 billion allocated to U.S. hospitality.
Right.
It's just an enormous company, and yet I think it's a relatively modest insurance company by Chinese standards.
That's right.
In terms of size.
That's right.
So, yes, Jack.
我可能有一点补充啊，就关于安邦的这件事情，其实我是因为我也是做地产开发呢，我还是蛮有顾虑的。其实我觉得这件事情可能还是有一点点问题，就是因为安邦它用一个比较高我记得是22亿美金去收购了这个华尔道夫酒店，但是我仔细核算了一下，如果靠华尔道夫酒店把22亿美金赚回来，我觉得它要非常长的时间。
Yeah, it's a 100-year franchisee contract. So. But trust me, in Europe, right, a lot of contracts, they are over 100 years. So we are here in the States, we're very different from the global market. But anyhow.
对，所以我的概念是，其实我也跟我的很多朋友说，其实来美国，我相信还会有大量的资金进入美国，但是我不希望它是破坏性的。 尤其是不要破坏性的这个破坏当地的一些商业环境和一些正常的商业的逻辑。
So I just wanted to make an addition to, since we're on that topic. For the Ambang case, I honestly, when it happened, I had some concerns about this project. Because the problem is, if you look at Ambang's case, they invested around 2.2 billion US dollars, I believe, into the Waldorf hotels. So I did my own calculation. If they want to recuperate at least that 2.2 billion, they're looking at a much longer horizon. So I think that when I was talking to some of my friends in China about investing in the United States, we do hope and we expect to see a lot of capital flowing into the United States. But the key here is we don't want it to be destructive capital. What I mean is we don't want that capital to flow into this market and to somehow affect the normal business operation and the business logic that is indigenous in this kind of environment.
对，我们希望它是更多有建设性的，而且是能找到一个双赢的策略，既对于我们国内的业务可能有好处，对企业是有好处，同时其实又能够让你被收购的这些物业资产也好或者企业也好，能够稳定的发展，这两者兼得，其实是我觉得这个对于未来在中国企业在美国投资，其实我们希望能够看到的东西。
So we hope that this capital flow into the United States can be constructive and it will ultimately create a win-win situation for both sides. Let it be our domestic or China enterprises that are investing in here, or the acquired asset or the acquired property in the United States will help it better develop in the future. So this is our goal when we want to invest in the U.S. market.
That's an excellent point.
Yeah.
I think, as investor, everybody has their own investment model. I'm sure there are a lot of number crunch. So what makes sense from an Ambang perspective may not make any sense to any of the U.S. investors. So that's an interesting point.
And there, for a while at least, there was a perception that most Chinese capital was interested in kind of trophy product in core markets like Los Angeles, New York, maybe San Francisco, sort of high-profile office and hotel. But there's been a sort of a maturing of that capital investment, I think, and now we see Chinese capital going into Houston, San Antonio, Denver, Cincinnati, markets that you wouldn't normally associate with, or being sort of, primary targets for foreign capital, and going into assets as, including self-storage. So I mean, we're moving away from the high-profile hotel transactions and office transactions to just anything that produces yield. We're all just chasing yield. So that maybe Chris, as we come back and look at the things you're working on, nothing is more important than certainty of close. You talked about the transaction you're working on that's been 18 months in the works of putting together a relationship. It's hard enough to do it with somebody here, but if you don't have an existing relationship with a foreign investor, it makes it that much harder. So ideas about how you can solve that problem. Conferences like this help, but I'm sorry, just real quick. The importance of having a relationship with a local operating partner before transactions come to market.
Yeah, I think the biggest challenge is that when you look at it from a seller perspective, they've made the choice to sell, and if there's ever a hiccup in that sale, you've just damaged that property if they have to bring it back out to market and sell it to somebody else. So they have no interest, a seller, in going with someone to pick a buyer if it looks like I'm just dating with that capital or I'm just saying hello. So my recommendation has always been if someone is serious about it, let's set up an entity in the United States. Let's show them something. For instance, I think we were talking earlier, and the money really needs to be here for 90 plus days before you can really even talk to a bank about putting a loan on something. And that 90 days really means probably more likely it needs to be here 6 months. So what we've learned in our experience is really to only talk with, and it's not just Chinese investors, but sovereign wealth investors, Chinese investors, and say, if you're really serious, we need to set this up. I'll show you my pipeline, I'll show you everything we're looking at, but let's have an expectation that this is probably a 6-month to 12-month process. And when you have those kind of conversations, a lot of things come out, like this idea of a longer term view. For a lot of what we do, I love that. It hasn't been the way we've done business, But this core account business that I just described came out of this idea that you have to bring your money here. Okay, if you're going to bring your money here, I don't want to bring it back. Oh, well, let's change the structure then. Let's get away from this promote structure that's heavily weighted to a 3 or 5 year hold. But it just takes time. And I don't think there's any reason to be concerned about Chinese capital coming in and partnering with it. I don't know. I would be concerned if somebody from China came to me and said, let's go buy something tomorrow. Because then I would know they're not real. And so, just like I would with an American coming to me and say, well, we haven't gotten to know each other enough.
Right.
We haven't talked about what's going to go right, what's going to go wrong. The structures haven't been set up long enough. And so, it all takes time, but I'm encouraged, and I don't mean this rudely, but I'm encouraged by the Chinese firms that have come in and said they don't need American partners, and they've made mistakes, and then they realize, well, maybe we do, maybe there is something there. And I think that's happened and now has worked itself out in a lot of ways. So, but if you're serious and you want to be a long-term player, you have to be willing to spend the money up front, to set up the entities, to start the relationship before there's an actual deal.
Yeah.
Right.
And you'll find, the serious investor, they do invest the time, energy, and whatever they need to really understand the landscape, right? The regulatory, the compliance, and they really do spend the time to learn that.
They open up local offices, even if they're just small, and they hire local or send people here to work and kind of start developing the relationships that Chris is talking about. Well, I know we're getting the short time window here, so I do want to make sure we allow for questions. We have great panelists. Hopefully there's some questions from the audience.
Yeah, you were mentioning about trophy properties and for instance, like the Macy's in Beverly Hills, like all these projects in downtown. And because I happen to know, so there's so much development in downtown with the Chinese and also probably San Gabriel Valley just because of the language. But if you were to break down LA into I guess geographical areas, where do you think, is any of the other capital going to the other areas that are not so, I guess, high profile? Because I guess most of the development, is probably because you want to get on the stage and kind of make a point that, China's really strong and that we're doing all these really first-rate properties and projects. I was wondering if you have any ideas, maybe Santa Monica, which I don't think really has, I know it's development unfriendly, or just other parts of LA. Just kind of.
Well, what I have seen and what clients and others that I know are working on, it's all sort of high profile stuff in downtown. It's stuff around Beverly Hills. It's the stuff at the near the Beverly Hilton. But it's also in the San Gabriel Valley. It's in Rosemead. It's in Pasadena and San Marino. It's scattered, and I think what you described and what I just sort of described is a little bit more typical of the environment a couple of years ago, and as I said, there's this maturing of capital, and now it's just interested in yield, and really it's now getting to a point where it's access to deal flow. Foreign capital doesn't have, if they don't have representatives here, they're not seeing the deal flow that somebody like Chris is seeing on a daily basis, so they can't make a decision. Should I invest in a deal in Long Beach or Santa Monica? They're just not seeing those transactions. Until they have somebody more local or they have an established relationship with brokers and others who are going to present those opportunities. So that's maybe a long way of saying that we're seeing the capital spread everywhere. And we are seeing it in places like Phoenix and Denver and Seattle and Portland. So it's not limited to the sort of the main cities on the coasts any longer. It's just chasing yield.
2016 is the last squeeze of the market, as we are close to the peak of the market cycle. I would like to know your opinion on where we are in this cycle, and do you think it's better for Chinese capital to wait for 2 or 3 years for next bottom? Thank you.
Well, if I could answer that question, boy. On an island somewhere. But here's what I honestly think. If you look at the numbers, if you look at the job growth, if you look at today, it was announced we have the lowest number in this cycle of people filing for unemployment. We have very strong job growth here in California. And in the real estate business, it is driven by people who have jobs, who have disposable income, who have income to spend on apartments, on office space. So I feel very good about where we are right now. I would also say that we have been underwriting for the last 4 years interest rates going up. Every one of our deals is in a much better position than we underwrote because interest rates have not gone up. There is not anything glaring to me like when the global recession happened, Fortune magazine had a cover that had people going to Phoenix to buy their third and fourth condos, and these were waitresses and these were busboys who were buying these things. You knew that was a red flag. I mean, you really had to know in 2008 that the world was not right. I don't see that right now. I think our biggest risk by far is a global event, a terrorist attack, something really unexpected that puts a shock to the system. But the banking regulations here in the United States, no, I do not see people over-levered. It's really hard to be over-levered. So I think when people try to tell me, oh, we should be selling, I think the opposite right now. I think it's going to be nothing spectacular, but just steady growth for the next few years. And we have the lowest unemployment we've had since 2006. Our president gets beat up a lot by the Republican Party, but you cannot say that we're not in a much better position today than we were in 2008. And I don't see that. I just don't see a major thing. I think we may have a recession and we may have a slowdown, but I've been around a long time, and I remember in '95, it was '94, it was stay alive till '95, and that was just a little recession. So I think we've got a couple more years left in the cycle. I think anything that happens that slows us down, it'll be an external event that's not controllable. I'm very optimistic. I think it's a good time to be investing in real estate.
So I apologize. I know there are more questions, and our panelists will be out in the audience and in the hallway, and I'm sure would be happy to answer questions and maybe sign autographs. So thank you all.